Joining us now is Ramamurti. He is the former Deputy Director of the National Economic Council. Bharat, welcome. So you think this is the nail in the coffin for future Fed hikes, but is it just right? When will we know if conditions are too tight?
Well, yeah, I think that if you look at the totality of the data that has come in over the last several weeks, you see an overall very strong picture. You've got a pretty robust job growth. If you look at, with the adjustments we got today, about 200,000 jobs a month over the last 3 months. That's very solid for this stage of the cycle. But at the same time, you're seeing wage growth declining a little bit. The CPI and PCE data over the last couple of months has been pretty solid. And so, yeah, I think that I would be surprised if the Fed was going to would raise rates again this year, and this may well be the top of the hiking cycle.
But then what about the economy? We were just talking about Bill. It's down 25%. They deal with small, medium-sized businesses and their payments back ends, and they saw this big slowdown heading into October, really at the end of October. And I just wonder, setting up for the holiday season, might the economy be slowing more than some would hope? How soon will we tell that? Or does it have to do with, how much top-line growth these businesses are able to get, and does that reassure them?
Well, I think, honestly, there's a bit of a mixed picture out there. If you look at some of the latest data we've gotten on business investment, on consumer spending, it remains fairly strong. But there's other signs like ISM that you guys noted earlier that maybe shows a bit of slowing. I think that clearly we are not where we were in third quarter of the year, where we had extremely strong economic growth. I would be shocked if we were going to reach that level anytime soon. But we should remember that historically speaking, 5% economic growth in the United States is way above the norm. I think we are settling into the kind of steady growth that the president actually talked about back in the summer of 2022 when we had very high inflation. He talked about how his goal was to transition the economy from the recovery period we were in then to a time when we would have declining inflation, steady job growth, and good wage growth. And that's really what we've achieved over the last few years. So overall, I think that the economy is in a strong shape. I think that the risks of over-tightening are more severe than under-tightening. And I think hopefully the Fed takes that path.
Yeah, even not doing anything with rate hikes is doing something. And what I mean by that is that the end of hikes is not the same thing as the start of cuts. The market is pricing in cuts next year. So far, the Fed is holding steady and saying probably not until the end of next year, and all of this is going to be data dependent. What would it actually take to see the central bank start to make those actions?
Well, look, I think you would have to see a significant slowdown in job growth. You'd have to see a reversal on wages. You'd have to see a variety of other factors like consumer spending and business investment start to turn the wrong way. My hope, obviously, is that we achieve the soft landing that everyone has been talking about. I think, largely speaking, the combination of fiscal policy and monetary policy over the last 3 years has gotten us to that elusive soft landing. I remember we should look at the United States in comparison to its leading competitors. Since the pandemic began, the United States has had the highest economic growth of any developed country. It's also currently has the lowest level of inflation. So I think both the fiscal policy and monetary policy has done a commendable job. And I think now is the time to sit back a little bit and wait to see how things develop. I should note, by the way, that there is one important risk that I think is worth highlighting. At the beginning of the pandemic, the federal government provided significant aid to the child care industry in order to keep places open. That's going to expire at the end of this year, and I think that there's a severe risk of a lot of child care centers closing next year without additional funding from Congress. That would lead to losses in that sector, of course, but also could have a pretty negative effect on labor force participation overall as people have to stay home because there's no child care available. It's something that I really hope Congress will address before the end of the year.
All right. How meaningful would that be if you saw that actually play out?
Well, I think that during the pandemic, when we saw a real shortage of child care available, there was a significant effect on labor force participation, especially for women. Mm-hmm. And what we have right now actually is record high labor force participation for women. We don't want to go backwards on those metrics for both men and for women. Child care is a critically important part of the economy, and I just hope that Congress won't be penny wise, pound foolish in terms of failing to fund this necessary investment.